Welcome to the closing beat, everybody. Happy Monday. Welcome back. Hope you had a great Easter weekend there. Long holiday week, Friday, Saturday, and Sunday. Man, I'm happy to be back, man. I like working. We're financial advisors here at Jazz Wealth. This is a show that we do every day just to kind of update you on the stock markets, the good, the bad, and the ugly. You're never going to meet somebody that works harder than Jazz Wealth, right? We're always working to improve here for our customers. We not only help with the investments, handle everything there. We have our own portfolios on our website, but we also do weekly classes to help you grow your net worth. We want your whole entire financial life to succeed, and we'll do anything we can to help you there. So we're not the typical advisors that get you as a customer, promise you the world, and then go play golf. My golf clubs are here in the shop, and they are just collecting dust. Anyways, let's talk about the stock markets today. You got a mixed day, right? So the Dow lower by 48, the S&P higher by 2, NASDAQ higher by 17. There's a disconnect there, right? What's the disconnect? What's going on? Anytime the Dow and the S&P are separated like that, you know that there's always some underlying reason. We'll, of course, cover that along the way. This is a really busy week, by the way. If you look at the chart on the bottom right-hand corner of your page, you can see a whole lot of nothing happened for most of the day today. There's a red dashed line on there, and that basically shows you that nothing happened, right? That was yesterday's close or Thursday's close, and the market's basically traded right plus or minus of yesterday's close. Thursday's close. The reason for that? You got over 140 names in the S&P 500 reporting earnings this week. Thursday, the biggest day. There's 64 names reporting on Thursday. Holy cow, that's going to be a busy day for earnings. There's over 400 stocks in the broad market that will be reporting earnings this week alone. So an extremely busy week. And because of that, investors said, I'll wait. Let me see how the bulk of the markets report earnings and then maybe make decisions from there. So far, 77% of all companies in the S&P 500 have beat on earnings. So that's not a record, but that's a good number for companies beating on earnings. A lot of people are looking past that, though, going, yeah, let's talk about revenue. About half of those companies have beat on revenue. So not amazing, not bad, right? Just kind of an okay earnings season so far. Of course, we're going to find out a lot more as the weeks go on. Tomorrow, earnings, we've got JetBlue, Coca-Cola, Lockheed Martin, Pulte Homes, Twitter, eBay, and more. So a big day for earnings tomorrow, and of course we'll cover everything that we can cover here for you. Market-wise, you've got today existing home sales came out. Well, actually over the weekend, existing home sales came out, drop of 5.2%. That's not good. However, everybody was kind of willing to look past that because remember last month we had this massive run up in existing home sales, double digits. I believe it was like 11%, 11.2% or so. And so think of a stock that has such an amazing run up. It's normal to see a little pullback. Everybody rushed out to buy homes last month. We've taken a little break right ahead of the summertime season. And overall, if you look from 2015 until now, you have existing home sales trading in a range, meaning nothing exciting, nothing scary, at least at the moment. Let's go over to the charts here and take a look. Here's the S&P 500 on your screen. This is the dojo. If you're one of our customers, log into the dojo. You can use all of this for free and play along with us here. S&P hinting at making those new highs. Like I said, not much probably going to happen until we get more clarity on these earnings. The real concern is the Russell. If we were to click on the Russell 2000 here, remember that the Russell 2000, if I can go back, all the way here, after the summertime, the Russell 2000 led the markets lower. Remember, the real sell-off in the markets didn't start till October, and we have the Russell already selling off. That's sort of seen as a leading indicator overall in the markets. Well, what do we have now? The stock market, look at the S&P 500, trending higher here for basically the entire year. Everything looking really good there. You go to the Russell 2000, it just can't play along. It hasn't made up its mind which way it wants to go here yet, and because of that, a lot of people are looking at this going, that's a bad sign. That's not good news. If you could somehow get it to break out of this range, if I zoom in just a little bit more, over this range would go a long way convincing people that the stock market really has a chance to make new all-time highs again. And so that's kind of where we're at. The Russell is like the warning sign at the moment, at least for investors there. We'll go into the markets here in detail, but 52-week highs and lows. We're going to be following those quite a bit more because you don't have a lot of them. You have a lot of stocks that are very close to that, but not that are breaking out. And when you hear all this great talk about the S&P 500 doing well, it's not doing that with the bulk of all of the positions inside of the S&P 500. Today went a long way here as far as getting some of the bigger names. You got Microsoft hitting new 52-week highs today. They have earnings on Wednesday, by the way, but that one, a big cap, big strong software stock moving higher. Software continues, by the way, to be the best performing industry in the S&P 500. So you've got the market, the S&P 500 is the index. You've got the sectors, which are like energy, consumer staples, etc. And then inside of all those sectors, you have industry groups, and software continues to be the best performer. Microsoft, of course, helping them out in that category. New 52-week highs, you got the rails. So ever since CSX reported earnings, all the rails have done really well, helping out the transports there. You got Norfolk Southern hitting new 52-week highs today. Union Pacific, I believe, was the other one. Yep, that's the other one hitting new highs today, so interesting there. And then Kimberly-Clark, we'll cover that in a minute. They had earnings. Great day for Kimberly-Clark, up 5%. New lows, not a whole lot. Retail based on your new lows today. Nordstrom breaking a new lows there after being in a long range. You could see the range sort of set there since December. Look, if you're looking for relatively strong stocks or relatively weak stocks that you believe will head lower if the markets pull back, this is where people look. Just compare from January of this year till now, nothing, right? No participation in the broad markets at all. If we go to the S&P 500 from January until now, it's an incredible rally. So what do you have on Nordstrom? You have a relatively weak stock. That's how we technical traders would say it. And so a lot of people betting on that continuing to move lower there. So that's that one. If we look at, let's just go around, since it was kind of a quiet day, I'm going to go around to some of the different areas of the market we normally don't touch. China continues to be the best performing country overall, right? 23% gains in China. It did pull back a little bit today, but basically 23% there. Doesn't matter how you want to look at it, whether you want to look at the different ETFs that we use here to track it, or you just want to go look at the broad-based indices over there, doing really well. So that's your leader. Canada, EWC, is it? Let me see. EWC is the most popular ETF for trading in Canada. Canada being the second best performer. Netherlands, Belgium, Austria, Hong Kong, and Italy, and then the large cap stocks in China being some of the better performing countries overall if you're looking around there. Now, earnings wise, we're going to take a look at earnings. You got earnings this week from, well, a ton of different names, right? If you want the most active ones, and you're just like, which ones do I have to be the most concerned about seeing a lot of volatility there? Facebook is your leader. Facebook has an average range of over 3% when they report earnings, meaning the stock, well, it's doing well now, but it can be plus or minus 3% and wiggle around in that range for the day. So that gives you an idea of what to expect there. They beat on earnings 96.3% of the time. They beat on revenue 89% of the time. So you got a company there that's really set up to perform hopefully very well. If they miss on earnings or revenue, you could see a really, really volatile move there. Visa. Take a look at Visa there. That's also one of your more volatile ones. Beats on earnings 95.5% of the time, 88.6% of the time. It beats on revenue. Has a day's range of about 1.1%. Tesla, a natural one. This one's pretty volatile anyways. Has a range of about 2.1%. They've got a mixed bag as far as earnings go there. So that gives you an idea of a couple of the names you could see some real excitement on there. Lockheed Martin, by the way, they beat on earnings 94.3% of the time. Beat on revenue 75% of the time. It's not really a big mover for earnings, but got the bar set pretty high there. For that one. There's just a ton of them. I mean, I could go on and on. I've got a list of 40 of them here, but you get the idea. If you're looking for active earnings plays, you're an active trader, that's some of your more volatile stocks on earnings. PayPal also. PayPal's got about a 1.5% average daily range if you look at the performance when they announce earnings there. So I just thought that was kind of interesting. All right, let's move on to the sectors. The way it works here, we cover the broad indices and any important news for the day. Then we move on to the individual sectors and point out things you may be interested there. Well, if you're in the dojo, you go over to our watch list here. It's already pre-sorted for you. You're going to notice, I see a lot of energy at the top here. We'll start with oil, USO. This is sort of a direct oil play, if you like that sort of thing. That's your big mover of the day. Oil is the big topic of the markets today. The U.S. said, hey, on May 2nd, we know that the waivers for the Iranian oil exports are going to come up for renewal. And the U.S. said, we're not going to renew them. We don't want anybody getting oil from Iran. And in fact, if you do get oil from Iran and you do not follow our warning, we're going to basically put sanctions on you, the country that decides to do that. There will be a handful of countries that flat out just ignore what the U.S. has done. So I expect to see more news there. Look, you're going to see on TV the whole idea of this new end to the waivers is going to take about 1 million barrels a day off the oil markets. It really doesn't have that big of a dent, to be honest with you. I mean, it's certainly a tightening of the supply overall, but it really isn't that big of news. I hate to downplay it, but 1 million barrels a day really isn't sort of moving the needle in general when it comes to that. But you got OPEC still tightening. Russia wants to get out there. They want to produce a little bit more. But we'll see. All those meetings are coming up. We'll follow that. Cool. You got REITs pulling back a little bit today. I'll use the ICF to show it. You could look at any one of these, really. Got a video coming up this week about investing in real estate using these different ETFs and different individual REITs, if that's what you like. I get a lot of questions on that, so I'll try to post that tomorrow for you for our FinTip series. But anyways, REITs pulling back there. Look, it's still higher by 15% on the year. It's one of the best performing stocks. It was one of the first sectors to make it to all-time new highs for the year. Today, it lost 1%. You got rates creeping higher again and very steadily creeping higher, so prices moving lower. You can look at that using the TLT if that's something you like to do. Just think of it in the inverse. As prices of bonds move lower, the interest rates are moving higher. So you've got a steady decline there, just basically showing you that there's a steady decline steady rise in overall interest rates. Consumer staples, the latest sector to hit new 52-week highs. That means we now have technology, communication services, real estate, utilities, consumer staples hitting new highs out of the S&P 500 sectors. We have energy, still a long way to go. Financials, long way to go. Healthcare actually turning red on the day. Or red on the year. So healthcare's losses over the last few days puts it negative. It's the only sector in the S&P 500 that's negative. You could see that sort of waterfall drop there. If you look at some of the names either in healthcare or biotech, they've recovered a little bit, UNH being one of them. Certainly recovering, but still as a whole, the XLV, looking at the healthcare sector, it is negative on the year. Not looking good. Also, you had a broad-based sell-off in retail today. Really a lot going on in retail. We'll cover a few of those things as we go. Nordstrom hitting new 52-week lows, so that gives you kind of a hint of what's going on over there. What was some of the other ones I wanted to point out? Urban, you guys care to see that? In the retail space, you got Urban, strong sell-off today, 6%. Buckle, I believe that's BKE. BKE is Buckle, if I'm not mistaken. There you go. About a 7% decline on Buckle, just kind of trading in a large range there. And your discount store is Ross, R-O-S-T, down 2% on the day. So retail as a whole just getting a lot of selling there here in the short term. All right, individual stocks that were in the news today. Well, we mentioned Kimberly-Clark, symbol KMB. Broke to new highs, having a great day, actually. 5.5% gain on the day. They beat on earnings by 12 cents. That's a good beat, by the way. That's a wide margin. The company said, look, we're charging higher prices. We've cut costs. Customers are paying higher prices. They're not complaining about this at all. By managing to cut the costs, they've had, analysts have been looking at them saying, look, you got a lot of foreign exchange issues going on there. And they basically said, by cutting costs and giving customers higher prices, and they were willing to pay it, that helped us beat on earnings and revenue. So Kimberly-Clark doing really well there. Tesla, a lot of things going on with Tesla. The main news is they downgraded, who was it, Oppenheimer? No, Evercore downgraded the stock today. They put a 240 price tag on it, which if you follow this stock, I don't know how much you guys follow, but 250 is the magic number. Look down here at these lows. 250 has been an amazing support for this stock for a long time, and now you've got analysts starting to say it's going under 250. That was the hint. By them choosing 240 as their price target, that was them essentially hinting to you that they feel like it's going to break that 250 support level. There was a fire in one of their cars in Shanghai over the weekend. They got it on video. I don't know. They're investigating it. We'll see what happens there. And also, the SEC and Elon Musk both together asked the federal judge to give them more time on that little tweeting dispute that they have going on there. So, in my opinion, that shows a little bit of progress. I didn't catch what the judge said, if they even ruled on that yet, but the judge was pretty clear. She wasn't going to give any extension. We'll see what happens there. Boeing was one of the stocks weighing on the Dow today. One of the reasons for your separation up here at the top between, oh, you can't see it, between the S&P 500 and the Dow. Boeing, there was a New York Times article came out over the weekend that said employees were concerned about, quote, shoddy production and weak oversight on the 787 Dreamliner out of their, was it North Carolina or South Carolina factory? I forget where that one's at. So that doesn't help with the good news. They go with the 737 news, of course, we're all following. 787 now is going to bring into question, oh my God, do we have to worry about this plane as well? Boeing was really quick to say that study was actually not based on facts and very inaccurate, but they really didn't say much else after that. We'll see. Netflix. There you go. About 5% gain on Netflix today, headed back towards these highs. Was our best performer in our aggressive stock fund, by the way. Added, like I said, about the 5%. Not bad, right? So trying to move over this high here. You got earnings coming up, of course. Netflix, very volatile on that sort of thing. I'm sorry, Netflix already had earnings. I was thinking of Tesla. Anyways, best performer in our aggressive stock fund. Oil and energy stocks, if you're one of our customers, you're going to notice those near the top of the list if you're playing along. In our dividend fund, you got Qualcomm still kicking, man. That's one of our best, I mean, naturally, it's one of our best performers after getting the sort of resolution between them and Apple. Stock was higher by another 2.6% today. Just by far one of the better performers in our dividend fund. Also, I want to point out ExxonMobil. We've got that in our dividend fund. I'm not suggesting that anybody go out and buy this or anything, but a good move today, about 2% on that one. Small cap remains the issue. I'll continue to point that out. Small cap is sort of the question mark on the overall market. In our small cap fund today, energy and financials were the better performers, but look, the sector's just not participating there, so definitely something of concern if you're thinking, will the markets make new highs or not? So that's basically what I have. If I have a chance, if you have any questions, I'm happy to answer questions for you, and I will dig through some of those now. Nishal says, Tesla's a buy if it gets to 220. Okay. Well, if it breaks the 250 area, you see a lot of sort of volume coming in there. It may be a quick move down to that area, given that it's already in a downtrend, but I would say that there are a lot of people that would like Tesla at 220, but we'll see. 250 is the magic number for now. Jake quoting on some of the stocks you got there. Nice. AbbVie. Yep. So a little bit of weakness there, right? Overall, just you get it. Generally, the whole sector having some weakness there. You got a discounted stock. I don't like the biotech stocks myself. I'm not a big fan there. Ricardo pointing out that 250 support there on the way back down. Just a choppy mess for the moment. Earnings, I think, will go a long way to sort of solve the short-term do you or don't you question. Yep. Tesla. Jake says, Tesla's a buy when Elon Musk is removed. Who knows? China could ban Teslas after this. China's a whole different story over there. I sort of fascinated by the Chinese markets. I don't know. I think it's too soon to tell, like with the car and the fire and everything. I mean, look, these things happen all the time with General Motors, with Ford. It's just not that big of a deal, but because it's Tesla, it gets a lot more attention there. All right, Jay is saying, is Amazon still too high? Well, so Amazon broke out of a whole resistance area there and back above the 200-day moving average. So the momentum at the moment's to the upside. You've got to kind of decide if that's too high for you, given the next resistance area, about $2,000. I can't tell you what to do with it, but it's just purely a risk to reward play at this point. Is that enough reward relative to the risk you'd have to take, which in my opinion would be to let it move under the 200-day moving average if you're going to give it that kind of room. So you got basically a 1-for-1 risk to reward if you're a short-term trader. Is that enough? I mean, is that enough for you to dive in? Social Security. Mike says, hey, one of your favorite topics came up today. Social Security going to run out of money a year later than expected. This is in my opinion, purely my opinion, this is all political positioning. You notice how for the last few years, nobody said anything about Social Security. You don't have people protesting on the streets. You don't have people angry at one side or the other, because it's only a topic around elections. Bottom line, Social Security will be there. It is going to continue to be there, maybe in a reduced fashion for you, but it's just a fascinating way how they just start eking these things into the news. And I want you to question that. As we get into political season, why are you seeing certain news headlines and you didn't see them before? What's the deal, right? Healthcare is a good example. All of a sudden, Bernie Sanders is going to knock out all of healthcare. Wasn't a big deal just a month ago, right? So start thinking and ask the question, why am I seeing this on the news? Why does the Democratic media and the Republican media all of a sudden talk about the same exact thing? And well, of course, they have opposite opinions, but why all of a sudden is this a topic? You're getting a real feel for how aggressive each side's going to take their position for what their platform is going to be. So we'll see how that goes. It's going to be interesting. Yay. We'll see. Jake, Social Security not going away. Amen, brother. Amen. And if it does, you want to see one thing that would unite the whole country on one side? Try to take Social Security away. It is not some sort of government handout. You pay your money into that, and it is promised to be returned to you. It is not an entitlement. It is not a, hey, just because you're a U.S. citizen, thanks for being a U.S. citizen. That's your money. So, I mean, if I have to lead the argument on that one, I will. But to me, it's like, why is nobody mad about that? Let's all get angry at that. I should do a video on the things that I think we really should be talking about. They're all silly, but we'll see. Autonomous Day by Elon Musk. Yeah, pretty cool what they're doing there. The question is Waymo ahead? So Waymo is a lot less public and sort of, hey, look what we're doing. They just come out with stuff. It is sort of rumored that Waymo is blowing Tesla away on some of these things there, but really cool. Either way, I love that there's a group of people moving towards that sort of thing. Mike just wanted to see me get fired up. I gotcha. All right. Well, I'm happy to be back. I'm glad I did everything correct. Not too much rust to shake off today. Hey, this Thursday, our class for our customers is going to be on what happens when you buy a stock. Where's it go? Who's buying it from you? What's the actual process? We're going to go through it, and we're going to explain exactly how we buy stocks here at Jazz Wealth, because notice how it doesn't cost us anything. Our customers don't pay commissions, so we're going to go through that whole process, how it works. I'll explain Robinhood and how Robinhood works, all of the other companies and how they manage to do what they do. Where does your order actually go? I'll give you a hint. It doesn't go to the stock market. You might think it does, but it isn't going nowhere near the stock market, or the exchanges, I should say. Jacob likes the purple light. Yeah, it's a mixed day. Got a little bit of red, a little bit of green. Does that make purple? I don't know if that makes purple, but purple seemed fitting. All right, guys, I'm going to wrap it up there. I hope you have a great rest of your day. If I helped you in some way, maybe you'll hit the subscribe button, and we'll chat with you then. Give us a shot. Check us out at jazzwealth.com if you like a teaching advisor, someone that wants to help you nonstop. That's what we're trying to do here, no matter how big or small your account size is. So consider opening or transfer your account to Jazz Wealth. We really appreciate it. And if you have any questions, you know where to find us. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.